names as well, which are doing extremely well from the frontline end. We have Bharti Airtel, which is among the top Nifty gainers. Asian Paints, ever since its numbers and ever since Rakshit Hargave's exit from Birla Opus, that stock's up 16%. So a big move is what we're seeing on that counter. And a couple of these financials, non-banking financials, doing well too. HDB Financial for one, and Shriram Finance stand out as gainers. But a lot of the movers and shakers that we're tracking today, one of them definitely is GMR Airports. Vivek joins in first up. Vivek.
Well, that's right. So GMR Airports, remember, came out with a very strong set of numbers. The higher tariff that the company has received in terms of dial or the Delhi airport is something that has aided the operational performance. And today, very interesting report from Jefferies actually has gone ahead and further aided the up move. So Jefferies, has gone ahead and raised the target price to 115 rupees a share from their earlier 108 rupees. They've raised their EBITDA estimates by 3 to 7% as they believe that the outlook for the company's earnings profile is improving. What they're saying is that GMR presents a unique blend to play utility as well as it is a consumption business model. The standout EBITDA beat in Q2 was despite soft traffic, and they believe Q2 was largely driven by newer tariffs, strong non-aero growth, as well as scaling of the adjacent businesses. Traffic dipped due to Delhi upgrades as well as airline capacity cuts, but they believe H2, there will be a significant rebound as far as traffic growth is concerned. Along with that, they believe yields benefited from tailwinds both in the retail as well as in the duty-free segment. The blended aero yield per passenger actually grew 69% on a year-on-year basis, and the non-aero yield per passenger grew 17% on a year-on-year basis. The company actually has gone ahead and given a formal guidance that targeting minimum non-aero revenue growth at 14 to 15% year-on-year. And on the back of that today, one of the top gainers, that is GMR Airports.
Yes, absolutely buzzing around in today's trading session, up around close to 5% odd. But hold on, Vivek, Emcure Pharma is the other stock that you're tracking on the back of a large block deal that's taken place.
That's right. So earlier, just at market open, you saw close to 500 crores worth of equity change hands as far as Emcure Pharma is concerned. Last evening, we managed to get access to the term sheet. So BC Investments, an affiliate of Bain Capital, remember they held a little over 6% stake in the company at the end of Q2. They went ahead and trimmed close to 2%. And the floor price for this particular deal was at a steep 7% discount. So now the interesting part is for further sale of shares, there's a 3-month hold-up or almost a 90 days of lock-in. But on the back of that, Emcure under a bit of pressure. This is due to the large equity supply that it saw in the trade today.
All right, Vivek, thanks a lot for that. That's about Emcure Pharma. Upasana joins in with more on Kaynes Tech. Upasana, the numbers weren't particularly bad, neither was the commentary, but the stock is sharply lower today.
Well, certainly, Mangalam, as rightly pointed out by you, the numbers were good and even the commentary. But mind you that today marks as the day as the QIP lock-in has been released. Now, according to Nuvama Alternate Research, as many as 12 million shares have been freed up for trade, which were under lock-in for 1.5 years or even more, which is why we can see the sharp fall. Now, coming to the management commentary, it remains quite upbeat. Here are some of the important takeaways. Now, management sees 1,000 crore revenue from its OSAT business in FY27 is what they've highlighted today, and 60% of the OSAT capacity is tied up with clients is what they have emphasized on. Coming to the OSAT business margins, it will be significantly higher than the existing business margin is what the management has indicated. And mind you, in terms of EMS players, Kaynes Tech enjoys the highest margins amongst its listed peers. Now, it expects PCB facility to be ready by the end of this financial year. And in terms of margin improvement, it believes that it will sustain going forward as well. And it has given a EBITDA margin guidance of 16% for FY26. So certainly the management is sticking to their FY26 guidance in terms of margin, and overall commentary remains upbeat.
Okay, all right. Kaynes Technology, that stock down around 4.8% at this point in time. I just want to point out that overall for the Bank Nifty is just about holding its head above the water, up around 15 to 16 odd points. But separately, we have the Nifty, which is down around 47 odd points at this point. The advanced decline ratio also nothing to write home about. So just about 1,560 stocks advancing to over 2,600 stocks declining. So there's a huge gap which is taking place in the advanced decline ratio this afternoon. But